Meantime, the New York Stock Exchange begins its second straight week of all electronic trading. And joining us right now on the phone is SEC Chairman Jay Clayton. Chairman, it's good to have you on the program again. It's been quite a week since we last spoke. Feels almost like a bit of a different world even. But you've now seen the world, or at least the exchanges operate, in the case of the New York Stock Exchange, completely electronically with nobody on the floor. What are you seeing right now?
Well, Andrew, good morning, and good morning to Joe and Becky. We did have quite a week, and it was a shift. I would say the culmination of quite a shift to telework for many of our critical market infrastructures, the exchanges, our central clearing parties, and the like. I have to say that we're very pleased with from an operational perspective with how that shift was accomplished. Of course, a lot of that is due to what I want to thank my colleagues at the Fed and the Treasury for their amazingly quick intervention in the pockets of the market that were under particular stress, particularly at the short end of the curve. I mean, we have a lot of 30, 60-day, 90-day markets in this country, commercial paper. There are many others I could talk about. And we have an incredible shock, an incredible economic shock that we hope is 30, 60, 90 days. And the targeted intervention of the Fed certainly helped the operational side of the ledger.
Chairman, one of the questions that we've been asked repeatedly over the past week, and I know it's something that you've been asked, so I'm hoping you'll respond to it, is about the Uptick Rule. And it came up again, actually, on our program on Friday. Investor Leon Cooperman had called into the program and actually talked about the Uptick Rule and what he thought was needed. I just want to play it to you because I do want you to respond to it, because I think it's probably one of the singular questions that at least we get, and I imagine you may too, about the call for reinstating the Uptick Rule. Here's what Lee had to say.
The area that really surprises me, and I'm not looking to pick a fight with the SEC, but I'm absolutely surprised that the SEC has not weighed in here. In 2007, for some unexplained reason, they removed the Uptick Rule, which aided and abetted a lot of these quantitative trading systems that are accentuating volatility in the market. They're buying strength, they're selling weakness, so it works both ways, okay? Certain countries have banned short selling. I'm not in favor of banning short selling. I think short selling should be allowed, but we should have this Uptick Rule to slow things down. They're scaring the hell out of the public. They're scaring the hell out of the professionals, okay? And the SEC should weigh in and to do something here.
Chairman, can you speak to that? Because I know it's you probably get that a dozen times a day.
Sure. There are 2 points in Lee's comments. The first is I totally agree with them. We shouldn't be banning short selling. You need to be able to be on the short side of the market in order to facilitate ordinary market trading. That's in agreement. His point on the Uptick Rule is, do you have undue pressure on a stock that's moving down through short selling? We don't have the old Uptick Rule that Lee's referring to, but we did put in place, and not a lot of people know this, an alternative Uptick Rule. And it's a rule that I believe more closely matches the electronic trading environment of today. Let me try to explain quickly how it works. If a stock drops more than 10% from its previous day's close, and it's important it's the previous day's close, so if we open down 4%, it's only another 6% to go. But if a stock drops 10% from the previous day's close, for 2 days, you can't sell short on the bid. So if the bid-offer spread, I'm going to use numbers that are illustrative here. Spreads aren't this wide. But if the bid-offer spread is 49 to 50, you can't sell short on 49. And we believe that this rule for single stocks, in combination with our market-wide circuit breakers, has actually worked to dampen the type of activity that Mr. Cooperman is worried about more effectively than the old Uptick Rule. Now, there'll be plenty of times to examine that in light of the unprecedented volatility we've had in the last 4 weeks. But that alternative Uptick Rule is addressing the issue that Lee is worried about, and he's right to be worried about. We need market integrity, but we believe we're taking care of it with this alternative Uptick Rule.
Chairman, one of the other things that you've done in recent days is extended some of the deadlines for certain disclosures for companies. So many CEOs are watching this program this morning, trying to understand what the new disclosure or deadlines mean. Also, investors trying to understand it. Can you explain what's happening?
Sure. Andrew, we're going to have an earnings season that is anything but typical. We have many of our companies who are trying to do their cash flow analysis. They have lots of uses, and many of their sources have been impaired or dried up. They have to figure out what their liquidity position. And our investors are thirsting for that information. They want to know how they're doing from a liquidity point of view, how they're doing from an operational point of view. And now that we have some, and I'm going to say some insight into another 30 days of social distancing and then something, how are they going to operate their businesses under the current social distancing and other rules, and how are they going to operate them going forward? All of those things investors are thirsting for. In this country, we have a great thing for public companies. Investors get to know how management is looking at the business, both historically and forward-looking. Now, in an environment like this, that's not easy because there's lots of routine things and other things in addition to all of those changes in the economy that reporting is going to have to deal with. So what did we say to companies? We said, to the extent you're unable to get your reviewed financial statements together because the auditors can't get to your locations to do physical inventory, or to the extent you have other problems, we're going to give you more time. But in order for us to give you that more time, you're going to have to explain as much as you can to your investors at this time, including why you need more time. So we're trying to be flexible, recognizing that investors and our markets thirst for the kind of information that I hope is going on in the boardrooms and I expect is going on in the boardrooms of most good companies. How are we going to bridge this period to the other side?
Hey, Jay, I was trying to figure out how to ask this question. And just in a generic way, a lot of people that have positions might go on media outlets to talk about the current crisis. Is there a difference, in your view, in calling for calm and saying, wow, these stocks are really cheap, and knowing that person has a position and is talking about, it could, if the market were to go up, it would help him. Is there a difference between that and coming on and talking about the market going down if they have a position where they'd benefit from it going down? Are both of those things okay in the current environment, do you think?
Joe, it's America. We love opinion. You guys are doing a great job of getting different views and trying to educate the public about our markets and their operation through this period. That said, there's a line where that ends and bad behavior begins. Now, I'm not going to go into, because every situation is facts and circumstances dependent, but do we like it if, to use the vernacular, somebody is talking their book, particularly if they're active in the market and aren't disclosing it? No, we don't.
Okay. Yeah.
Chair, I think that he was very politely referring to Bill Ackman. But let me ask you.
Andrew, let me be clear. Andrew, I'm not referring to anybody. Right. I'm just saying that if people have positions and they're coming on, let me just say as a citizen, let's just say as a general citizen, if you're coming on and talking about the markets and you have particular trading positions, you probably ought to tell people.
Right. And I should say, in the case of Bill Ackman, my understanding, and I can't speak to the segment itself, but I do know that he had publicly disclosed in writing prior to those appearances what his position around some of those hedges were. Let me ask you a different question.
Let me jump in there and respond more generally to Joe's question, because our enforcement division did put out some guidance here, and we are in volatile market times. And when you're in volatile market times and there's uncertainty, that is a time when there is a great deal of asymmetric information and what people would call material non-public information. We're telling companies and market participants, look, we know it's tough, but practice good hygiene. Make sure that if you're disclosing, you're doing it broadly. Make sure that you have controls over your material on non-public information. The public needs to know that people are continuing their commitment to integrity here.
Right. To that end, let me ask you about political leaders. One of the things that's happened in the last week is, and there's a report out that the FBI is investigating Republican Senator Richard Burr related to some stock trades around the coronavirus and what he may or may not have learned in his role in his job. What is your view of politicians trading stocks, period?
Andrew, we have the Stock Act, and I want to be clear. I'm not commenting, and we have a very rigid policy about not commenting about whether an investigation is happening or not happening or anything. It serves the public well, it serves us well, and it serves people well. It's America. It's good due process. But anyone who is privy to private information about a company or about markets needs to be cautious about how they use that private information. That's sort of fundamental to our securities laws. And that applies to government employees, public officials, et cetera. And the Stock Act codifies that.
Okay. Chairman, we always appreciate you calling into the program. As this progresses, I hope that we'll be able to continue this conversation. We appreciate you joining us this morning.